With just a little more than 2 months left in the year, the S&P has gained 9% in 2023 and up 82% since the pandemic low in March of 2020. This as mega names on Wall Street throughout that period, from Jamie Dimon to Michael Burry to Carl Icahn, had warned that the U.S. is on the cusp of a crash or an economic hurricane, maybe even a recession. One of the most well-known voices in the markets is saying now that sentiment is truly at a turning point. Billionaire investor Leon Cooperman, Omega Family Office Chair and CEO and the author of the book From the Bronx to Wall Street, joins me now in a Fox Business exclusive to tell us what he sees. Leon, great to have you here. The timing is really important. What shift do you see in sentiment and why?
Well, I'm not so sure it's a shift in sentiment, but I would say that I have a conservative view of the world. When I look at what's going on in the world, I conclude that price-earnings ratios are too high, and they should come down, and they have been coming down. I think you have to have a very nuanced view of the market. You know, one is the S&P 500, and the other is individual stocks. I find plenty of value in the market, but I find very little fascination in the S&P 500, which is about 19 times earnings. It's too high.
Okay,
too high relative to interest rates, and I think interest rates are going to go higher.
So this is specifically on valuations. You know, we were looking at the S&P price to earnings ratio. It's actually higher this year, albeit slightly, than it was last year. So, you know, tell me exactly what it is that you're seeing coming down. I mean, some valuations are coming down, but regardless.
Well, I think the bulk of the market is coming down. I mean, earnings are up a bit.
Hi, it's Tisha Paul, and thank you so much for watching American Television News. I'm reminding our viewers to subscribe because we have 1.7 million views. It's free to subscribe, and you're helping this channel out a lot. So like and subscribe because we've gotten the numbers, the 1.7 million views, and we are also teaching money on this channel. And it is free to subscribe, and once we hit 100,000 subscribers, we're able to start giving out prizes to some subscribers. But you can't get a prize unless you subscribe, so just subscribe so you can earn money. You can also learn money. Those who subscribed earlier learned that Bitcoin was at 24, it would be at 37, and they've made money from it, so we are grateful for that. And check out the tag products today. They are from Sephora. They're lovely, they're great, they are gorgeous, and not one tag product moving today forward is over $100. We understand that we're in an inflation, so we try to get tag products under $100. Treat yourself to some beautiful Sephora products. They're lovely, they're gorgeous. We'll come back shortly to talk about what Fox Business had to say with the billionaire about the U.S. recession. But check out the tag. That was a billionaire talking on Fox Business, and they were talking about the U.S. recession. So let's kind of summarize what the billionaire talked about. And don't be afraid of the words that were used today. They're just words that mean numbers. So he talks about the recession. We're going into a recession in the United States, and we're probably going into a recession all over the world. It's just a temporary economic decline. He spoke about the inflation, act of inflating, general increase in price, and there's no fall in the price value. So that's what we're in. We're in an inflation, getting ready to go into a recession. And we're going to teach you how to invest in this recession. By the end of this news, you'll know how to invest in a recession. So he talked about S&P, and you might be saying, what is S&P? It's market capitalization weighted an index of the 500 leading public traded companies in the United States. So I made a thing like this so you could see it. Let me show you the one with the recession as well so you could see it. Some people love to take notes, so there you have your notes. So you could look back. Now, we looked at the stock market. Google is at 132.59, Apple 186.40, Tesla 214.65, Amazon 143.56, Microsoft 369.67. These are top stocks that you should invest in because the cap rate is high. And Bitcoin is at 37,000 and change. We've been telling you from it was at 24,000 to buy. Some subscribers bought, others didn't. But Bitcoin is on its way up. So how are you going to manage this recession? You're going to do four things. You're going to save. You're going to invest. You're going to pay down bad debt. And you're going to budget. We'll define bad debt. Mortgage is not a bad debt. Mortgage is a good debt. Car payments are bad debt. Student loans are bad debt. We're going to avoid or we're going to pay down our bad debt. We're going to save, invest, pay down, and we're going to budget. You have to invest in this recession. Here are some examples of things to invest in this recession. You can invest in real estate, digital assets like YouTube, TikTok, Facebook. No, you don't own it, but you can have a shop on there, or you can have a YouTube channel. You can have a TikTok shop. You can have a Facebook shop. You can even have a shop on Amazon or Shopify, or look into Airbnb. But you need to look into digital assets. It is the future, not the past. Bitcoin, look into Bitcoin. It's at 37,000. I wouldn't put all my eggs in Bitcoin, but Bitcoin is on an uptrend. Mutual funds, we just went over that. You can get that from your lender. And what about the stock market? You should learn the stock market as well. You get to invest in it as well. And what about Forex? We'll talk more about Forex as well. So this is what's going on. In June 2023, single-family homes are 410, 200. Townhomes are 265. The government is on the hook for 33 trillion. We've heard from the billionaire. He talks about deficit. We'll go over deficit shortly. And 70% of the homeowners own 4% or less. So that means that the real estate market isn't going to crash because most of the homeowners have equity and they have interest rate that is backing them at low numbers. So don't be hopeful and praying for the real estate market to crash. Figure a way to get in when the market dips. That's the best option for you this time. If you didn't get in before, is to get in when the market dips. Okay, so we know the Dow, the 2023, the Dow Jones is at 14.81% is up. We know S&P is up 8.31%, and that's according to Trade and Economic. And the deficit, it's a liability over income or asset in a given period. So that's what a deficit is. And don't be afraid, the government has a deficit running, but you are going to invest in yourself. You are going to follow what we said. You're going to save, invest, pay down bad debt, and you're going to budget. There is no other way out. Bad debt is credit cards, student loans, car payments. Good debt is a debt that's attached to your business or a mortgage. Those are the only good debt. You need debt. Sorry, Dave Ramsey. I'm saying it again. You need debt. But you need good debt. You don't need bad debt. You don't have to pay off all your debt. You just have to pay them down. Remember to save first. Save at least 10% of your income. Pay yourself first. Do not pay yourself last. Why do you think IRS pull money out of our account first? Because they recognize that you'll be forced to live on the rest. So you need to pay yourself first, not last.